Hello traders, and welcome to lesson number 13 in the ReadFX Beginners Forex Trading course. In this lesson then, we're going to look at simple candlestick patterns. There are two main types of candlestick patterns. We have single candle patterns and multi-candle patterns. So let's go over to the charts and we'll get started with single candle patterns. Okay, so here we are in TradingView, and what I'm going to do now is I'm going to show you just a couple of commonly used single candle patterns. Now, the point of this video is not to show you every single candle pattern in the world because it would be about 3 hours long. So I'm going to pick two very simple single candle patterns to show you, and I'm going to explain really what they mean and how we use them. So let's start off with a really easy one. So this candle here is called a doji. Now a doji, the open and close are normally very close together, and a perfect doji would be where the prices are the same. In which case this would not have a body, it would just be a single line. Now the legs on the doji, the wicks at the top and bottom, some people think that if it's got longer legs that's better, others think if it's got shorter that's better. This is all traders' opinions, but it doesn't matter. Now this here is also technically a doji. It's not a perfect one. You can see it's got a bit of a body on it, although I am zoomed in really far on this chart. This one up here is a better one. The open and close prices are much closer together, so this is closer to being a perfect doji. This one here is a perfect doji, as you can see. Now there's also something called a 4-price doji, and that means that the open, the high, the low and the close are all the same price, in which case it's literally just a line with no wicks at all. So that's called a 4-price doji. If it has very long legs, it's called a long leg doji. This one is what's called a dragonfly doji. If it was the other way up, it would be a gravestone doji. In fact, that's a very good example of a long leg doji. Here's a gravestone doji. This is a not so perfect doji, but still a doji. Basically, all you need to know is that there are many variations, and it's a candle where the open and close are close together. And whether or not it's got long legs to me is irrelevant. What I'm more interested in is what it means and also the context. So it's a reversal candle. What that means is if you get a move up and then you start seeing dojis appear like this, that's an indication that price may be about to go down. So in this case, it works. Price is going up. We start getting dojis. 1, 2, 3 dojis, and then price falls away. So this reversal pattern worked. So for me, it's about where the candle patterns actually print on the chart, rather than whether or not this is good enough to be classed as a doji, or whether or not this is good enough. I really don't care about that. These are the things that traders focus on, which is, in my opinion, totally wrong. The best thing to focus on is the context. In other words, what's going on around where the candle has printed, rather than is this the best doji you've ever seen. So another commonly used candle is a Pinbar. Now a Pinbar is also a reversal candle, and it's actually quite similar to a doji, and some dojis are, in my opinion, Pinbars. There's no real difference. You could argue that this is a Pinbar. Some people would say this is a doji. I really don't care what the difference is. To me, it's just a reversal candle. If the top wick was a little bit shorter, or if it didn't have one, that would be what's called a hammer, which is a type of Pinbar. Let me see if I can find you a really good one. So this is an inverted hammer. Some people would say, oh, that body's too big, it needs to be a bit shorter. As I've just said, I really don't care. I'm more interested in the placement. It's a reversal candle. Price went up, printed a reversal, came down. So for me, that's good enough for me to call that an inverted hammer or a Pinbar or whatever. I really don't care. For me, it's where it prints. Here's another example of one. This is a very good one. So this is a hammer. It's got a nice long wick on it, and then you can see why they call it a hammer. Obviously this is the handle, and this is the bit you would hit something with. So it genuinely looks like a hammer. Again, it's just a reversal candle. So what the theory behind it is that within this period, this is a 1-day chart. So at some point in this day, price came all the way down here and then pushed all the way back up, which means momentum is bullish. So what it's saying is price should now go up after this candle has formed, and you can clearly see that it did. So this pattern worked well. But again, it's formed after a move down. So it's formed after a move down, and then it's rejected lower prices, and then price has gone up. So it's not whether or not this is the world's most perfect Pinbar or hammer. You shouldn't care about that at all. It's where it's printed on the chart. Is it in the right place for this reversal to happen? And in this case, yes, it was, and it worked. So these are examples of single candle patterns. Now we're going to look at some multi-candle patterns. Now a multi-candle pattern, as I'm sure you've guessed, is just a pattern that has more than one candle. And it can have different patterns within that pattern, but I'm not going to overcomplicate it. So a really simple multi-candle pattern is what's called inside bars. So we have an example of that here. So this bar here is what's called the mother candle, and then these are the baby bars inside. So it's mother and babies, and it works like this. If we draw a line from the low and a line from the high, we can see that these candles are inside, they are within the range of the mother candle. Now eventually a candle will break out, and that should set the direction. More often than not, what happens is a candle will break out and then break back inside and go the opposite way. And that's an entirely different strategy altogether, but still based on inside bars. Okay, so now I want to show you one of the most important multi-candle patterns that you'll come across, and you'll see this everywhere. Now, it's got lots of variations and different names, okay? So it's basically a candle that goes up, an indecision candle, which is usually hanging, and then a candle that goes down, okay? And then this signifies a reversal. So price was going up, then it was indecisive, then it was going down. And you can see we go straight into the same pattern again. Price was coming down, then it was indecisive for a couple of candles, and then it went up. Now you'll see these absolutely everywhere. It can be called a hanging man, a morning star, a shooting star. I really don't care, okay? They all mean the same thing. I also don't care if it's an absolutely perfect textbook example like this one, or if it's a bit of an ugly one like this one. As long as the pattern works out, as long as it's formed in the right place, I will take the trade. So let's see if we can spot a few more examples. Okay, so here's another example. Price was coming down, we got an indecision candle, and then price pushed up. Another one here, price pushed up hard, indecision, price came back down. Another one here, price came down, indecision, price pushed up. You'll see them literally everywhere. Price pushed up hard, indecision, price came down. Price came down, indecision, price came up. It's literally this simple. And I'm not looking at these patterns and saying, is this a morning star? Is this a shooting star? Is this a hanging? I don't care. It's totally irrelevant. Is it in the right place in the market? Has price moved in one direction, then been indecisive, then it's probably going to go the other way. That's all I'm looking at. So this is the way to actually use candle patterns. Most traders are focused on entirely the wrong things. Most traders are looking at this and saying, is this a good example of this? And I see this a lot in the forums. Is this a good enough example for me to trade? That's totally wrong. Don't look at it like that. Look at the reversal again from this level just after. So without me scrolling over to the left to see what's happening, I know that this level is an important level. And if I do my analysis properly, I haven't covered support and resistance, but if I had drawn my resistance on, I'm pretty sure it's at this level, which means that when this happened, price pushed up, then showed indecision, I'm absolutely going to be selling here. And look, you can see that it worked perfectly. And the next time price came up to that level, it fell away again, okay? So rather than looking at whether or not this is a beautiful example of this pattern, and whether or not, and instead of worrying about what it's called, is this a hanging man or a morning star or a shooting star or whatever else it doesn't matter. It's the same thing. Price pushed up, it was indecisive, now it's going to go down. That's all that matters when you use candlestick patterns. Don't focus your energy on the wrong things. Okay, so in this lesson then, we covered single candle patterns and multi-candle patterns. In the next lesson then, we're going to look at swings.